Welcome to the Brain Picker Pro Show, live from Lake Wiley, South Carolina, and all the way up north in Indianapolis, Indiana, is my good friend Sterling White. This guy is a mover and a shaker. I've heard him on some other podcasts. I've seen what he's doing, and I'm like, man, I got to get this guy on here and show you guys exactly what he's doing and give some really, really good content. So this is going to be content only. We don't have anything to sell. And if you like the show, whether you're watching or whether you're listening, please leave us some feedback, okay? We really, really gratefully appreciate that. That means a lot to us. And if we can ever help you out, please be sure and reach out to us at larrygoins.com. So without further ado, Sterling White, what's going on, buddy?
Thanks so much for that phenomenal intro. And those of you who are tuning in, keep your ears open because I'm about to drop some gems and golden nuggets for you.
That's awesome, man. Hey, why don't you start out and tell our listeners and viewers a little bit about who is Sterling White?
So Sterling White was, well, I want to speak for myself from third person, of course.
right. Be like the Seinfeld episode, right?
Exactly.
Jimmy doesn't like conflict, right?
But I was born and raised in this market in the not so good parts of the city where you wouldn't necessarily walk your dog at night or even during the day. And through the course of that, I, through my upbringing, lower income, so I had to work for what I ultimately wanted. So that's how the entrepreneurship bug came to fruition. Early elementary school days, my first product was actually Kool-Aid, selling that to kids throughout the school and then scaling that operations. And fast forward into
man, I just gotta say, I've never ever heard anybody say scaling that operation in reference to Kool-Aid.
yes
I love it.
Well, now always business in my head. And so
I love it.
So fast forward to how I got into real estate is on the construction side, and this is where things weren't going so well in the 2008, 2009. And then 3 to 4 years after that, that's how I got into single family home investing and owned just under 150 single family homes, both my partner and I, and we've shifted more to multifamily. So our current holdings are just under 400 with the single family and also multifamily, so apartment complexes.
Awesome. So you're doing nothing but multifamily right now, right?
That is correct. Exactly.
That's good, man. That's good. And I've heard you on some other friends of mine's podcasts, and I'm like, I got to get you on here. So let's just jump right in. I know you've got a lot of little techniques and strategies and things that you use. You're a technology guy. Tell us a little bit, first of all, about why you like multifamily so much.
Multifamily is very scalable. So with our 150 or so single families, we were involved with, I would say close to 100 transactions with individual owners of those 150 assets. And with the multifamily, the 250 so units we have were just 4 transactions. So just with that, there's those purposes. And then economies of scale is another benefit as well. Is we have an 80-unit apartment complex. There is we can have people on site that are managing that versus with our single families, they're scattered throughout the city. So we're having to send a maintenance guy up here and then he's having to go. So there those benefits. And then the last one is determining your exit. So it's based upon NOI is what a buyer looks at because it's more sophisticated. So if you're able to drive that, that's you have more control.
Now, is it feasible that somebody just starting out could start with multifamily?
I would say start with where you're comfortable. Myself, my first deal that I acquired was a single family home residence, and I had no credit. I was couch surfing at the time and had no money in the bank. I actually had negative because I over withdrew my account. But all those, weaknesses or holes that I had, I found someone who had that and I brought them that first deal and was able to retain equity in it as well. So that's one thing I would mention to people who are just looking to get started is from my experience, if you have these holes, you basically find someone else who complements you, that person who I brought the deal to didn't have the time, but they had the capital. So I had the time and I had the deal.
That's sweet, man. That's sweet. Now, everywhere you go, man, people are talking multifamily. I got 200 units here, 400 units here. My goal is 1,000 units by the end of the year. With so much competition, how do you find these deals?
It's tough, definitely into today's climate, but it's about having systems in place. What we do is we've taken the off-market approach, because now anything that hits the market it's just not feasible. People are just over it. Yeah, it's multiple calls to offers, highest and best. So our objective is to beat the brokers to the punch. So the 4 deals that we've acquired were all direct to owner. And the process we use is cold calls, outbound sales ultimately. And yeah, that's the process. I can go to the trenches.
How do you find that list of people who own the multifamily properties?
So we build it. So we'll go in, you can use something like ListSource, or if you have a broker that's a friend. So we have a relationship with a broker that has access to more public records, so you can be very targeted. But let's say you go use ListSource, for instance, .com. You pull, our criteria is apartments between 50 to 150, let's say Louisville, Kentucky. So we'll pull that, and then we'll do further narrowing and say, okay, these are war zones. We don't want to be here. These are income restricted. We don't want this. These are luxury. We don't want this. Okay, here's workforce housing. So we'll have that. So we'll be very targeted. And then from there, that's when we'll bring in a researcher to scrape the data of who is the owner of that asset. Most of the time it's by an LLC. If it's someone who's even less sophisticated, they'll put in their name. And then through that, once you skip trace and find that person's information, phone call, you pick up the phone, call them.
Right. Okay, good. That's good. I love it. I'm taking some notes here, man. So 50 to 150 minus the low income, minus the war zones. Mm-hmm. Then you have somebody scrape all that data. That could be a VA, right?
Yes, exactly. Fiverr.com, very cheap. Or also Upwork, but I would recommend Fiverr because it's definitely affordable. If it's ongoing, then you can utilize Upwork. That's just from my experience.
That's really good. Just so guys, you understand, Fiverr is typically a project-based VA service, right? Where
exactly.
Like I need a flyer design, or I need these, this list put on a spreadsheet or whatever, right? Or research these people in this area, whatever it is.
One-offs.
Or it could be ongoing.
Exactly. And you can do Upwork as a project-based, but Fiverr is just so much more beneficial for that, and they're already set up.
Right. Exactly. Good point. So, let's say you scrape the data. You got somebody making phone calls, or is that you making the phone calls?
It was myself that was making phone calls, and my face is nice and, well, it's not bloody now, but definitely you take some punches from individuals who aren't looking at selling or just having a bad day. But if you're not a person, which I get these questions quite a bit, that, hey, I'm an introvert, I'm not willing to make calls. One is you have to step out of your comfort zone in order to achieve your goals. But if it really comes down to it, you can go back to Fiverr or Upwork.com and hire someone to make those calls for you. And that's what we do.
But you're not, so you have a VA making those calls now.
Not a VA. It's more of someone who has a sales background. And they're more, so it was myself that was doing it, but now we have them, they're making the calls and then setting the appointment. Once the person meets our qualifications, apartment complex is 50 units plus, and they are interested in selling. And then that's when they set the appointment with me or my partner.
I hope you don't mind me asking, do you have one virtual salesperson calling? Just one?
We have 2 at this moment.
2. How many hours a week are they working?
I would say between 10 to 15. And the amount of leads that they're calling is less than 1,000, because we're in markets within Indiana, Kentucky, and also Ohio. So it's not a huge, like what you would get some more on the single family side, it's like abundance of
I'm
leads.
with you.
Ours is very narrow and tight knit.
Very niche.
Very niche, correct.
So how many leads can they generate in a week?
2 to 3.
Two to
Very
three
small.
leads.
Yeah.
How many do you think you have to get a deal?
I would say we're looking at between 150 to 200 properties in order to snag one deal.
Wow.
Yeah.
That's a lot.
Yeah, it's a lot. Yeah. Volume.
But hey, once you get it, man, it's not a deal, it's a steal, right?
Exactly. Yeah, and that's the thing right now is that's what it has to be. If you're looking for subpar deals, then definitely that number could be more. But yeah, we're only looking for not necessarily home runs, but solid ones at this moment.
So I would imagine that you're doing syndication on these, right?
It's all out of my pocket to fund the deals. No, I'm just kidding. Not there yet. Not there at this moment. But yes, syndication, correct.
Good. So talk a little bit about syndication. Most people have heard of it, but just talk a little bit about it, and then we're going to talk about how to find those investors.
Yeah, so the syndication process is most of it is you have to have your legal side that is in place. And then for us, we already had the foundation set. We built our own specific software to facilitate the process. So we have let's say we have a deal that's available and we provide our partners, well, I don't want to get too much into the numbers to kind of throw people off, but where would you like for me to go with this, Larry? I want to make sure.
I want to get an idea about, just overall, a syndication is basically an investment.
Mm-hmm, correct.
They're invested in the property. They're investing in an entity that's buying the property, and they typically get what's called a preferred rate and then a bonus, right?
Exactly. I was going to go into preferred, but I'll go. So normally we'll do a preferred return of 8%. And what a preferred return means to all of you is, let's say you're doing an 8% pref, is over the course of the year, is the investors get their 8% until, so you'll do an 8% preferred return, and then normally you'll do a split over that. So we'll do a 75-25 split, 75 to our partners, 25% to us. But in order for us to get that 25%, partners have to get their 8% first, and then that's when we start getting paid. So that's what a pref means for those.
So over and above the pref, the passive investor gets 75% of the net profits?
That is correct.
Is there a cap on that?
Not at this moment. We just cap it straight that way. Correct.
Okay. So, it's realistic that they could earn 8% because there's no profit, or they could earn 80%, right? Depending on what the investment does over a period of the years, right?
Exactly. And that's when the IRR comes into place, and that's when, there's, I don't want to get too much and throw people off.
That's okay. That's okay. Yeah. What he's talking about, guys, is IRR, internal rate of return. That's the entire rate based on everything, right?
Mm-hmm. Cash flow, including the sale, and then also that can be calculated when you sell. If you sell it in 3 years, it's going to be a different calculation than 5 years because in 3 years, yeah,
3 versus 5.
Exactly.
Right, exactly. So let's talk about, where do you find these investors to fund your deals?
Yeah, so investors are one tremendous source is, which I'm a Bigger Pockets contributor. So those of you who are on here may have seen my handsome mug on there, writing the blogs, also on the podcast and doing the live streams. So through creating value for others, in return, they get into your funnel because you become trusted and reputable. So that's one great source is biggerpockets.com. Another one is your power base, meaning your friends and family, and somewhere up the food chain in your current inner circle, there is a rich uncle or a rich aunt somewhere through that, or a friend of a friend. So sure. There's that. And then also you can do networking events. I would say every market or every state has some type of meetup group that is real estate focused. And there are people out there that, again, don't have the time to find the deals, but they do have the capital and they want to be passive.
Now, it's always been a concern of me of people out there teaching how to raise money and stuff like that, because there's a lot of legalities. I mean, you're dealing with the SEC, Securities and Exchange Commission. So you got to make sure you dot every I and cross every T and make sure you do it the right way. And there's different types of funds. Like some of them have to be an accredited investor or sophisticated investor, or you can market to just your friends and family. You've got to establish a relationship with them, depending on the type of fund. Will you touch on that just a little bit? I mean, I know there's no way to get into all the legalities and all that, because anybody doing this, they're going to hire a securities attorney. Am I right?
Exactly. That specializes in that, not just a lawyer that does everything.
Right.
It's just, yes.
Right. And I mean, you can't just go out here and start running an ad on Craigslist and say, West Side Villas, $2.8 million. I'm raising money. I'll pay you 8% preferred. Give me a call. You can't.
Big no-no.
Big no-no. You can't just advertise to the public like that. Right.
Yeah. So on our side, we did hire a attorney that does specialize in securities. And through that, he told us everything that we could do and should not do whatsoever. And for us, we go through Reg D. I'm trying to think if it's 504 or 506. I believe it's 506. But we can accept funds from both accredited and non-accredited, but we cannot general solicit. And we also have to establish a relationship with an individual as well.
And what does that look like?
Establishing a relationship?
Right.
So when someone visits our site, they register holdfolio.com, which is where we attract investors to.
So say that website again.
Oh, it is holdfolio.com.
Okay, good.
And through that is they have to, once they register, they have a phone call with us. And then through that, we better understand what their current needs are and what they're looking for on the investment side, and if we can be a good fit. So there's that, establishing the relationship. And then we have a couple phone calls after that to establish, again, there's like a cooling off period that they call it. And then that's when that person can invest with you.
Okay.
But it's not from the gate. Someone hits and that's our specific regulation and how we have to structure it. Someone couldn't go to our site and visit our invest page and then see that we're accepting investments from Bentwood Apartments. Here's all the offering documents. Fund your investment when you're ready to go.
You can't do that. You got to make sure that only the people who are qualified and you have that relationship with can see your actual property offering. You can talk generic, just like we're doing right here all day long, right?
Exactly.
But you can't make an offering, right, of any investment until you've built that relationship.
That is correct.
Tell us about what is the cooling off period. Share that with the listeners.
That I would actually have to revisit. I know there's been some changes in that. From what I previously read, the cooling off period it's very generic in how they have it structured.
Right.
On what is a cooling off.
Guys, that's all legalese. Don't give them a hard time for not answering that.
Yes, please don't.
Stuff the attorneys deal with, right?
Exactly.
Why you hire a professional. You hire a syndication attorney. Don't just try to get any kind of an attorney to do this. It's got to be a syndication attorney. Right, Sterling?
Mm-hmm. And you just confirm with them, hey, am I able to do this? No, Sterling. All right, fair enough.
Good. So tell us, I mean, you're up to about 300 units now and in a little less than 3 years. Tell us, how did you do it?
Whew. A team is one of the biggest things, and having the biggest thing is having someone, well, for myself, complement my weaknesses, which is my partner, Jacob, in the business. So I'm more of an extrovert, marketing, attracting the investors, getting the deal flow. He's more of cleaning up my mess, operations, running the financials. So that has allowed us to go faster and really scale things. And then just putting people underneath us and then setting up the right systems to put them in the best position to succeed. So I know that was a little generic on that, but
No, that's okay.
yeah.
So what all does your team look like? I mean, you said you have Jacob, your partner.
Mm-hmm. Correct.
And then I know you've got the two salespeople that are virtual. Is that
Correct.
all that's on your team, or do you have more?
Yeah, so we have them. We have, I would say, 2 to 3 virtual assistants that work with that do the researching for us. So let's say owner's information is bad. We've called their numbers. We'll just tag them, hey, go find additional information versus taking away from that person's time who's doing the cold calling. Only want them to focus on cold calling. We have a COO that operates our property management company because we self-manage our own assets. And then there's a leasing agent, administrative assistant, there's a construction manager, and all of our maintenance techs that are floating around. So I would say just under 20 to 25 people is what we have on board.
So you don't hire a third-party property manager. You manage it yourself. You self-manage.
We were until just recently when we expanded from Indianapolis to Louisville, Kentucky on that 80 unit acquisition. So now it's going to be our first time managing the manager, which is managing the property management company that's overseeing that.
Right. Okay. Are you going to change management companies with that project, or are you going to keep the same one?
I would say at some point in time, we'll look to bring that back in-house. I would say after 2 to 3 years, because that's a deep value add, meaning we're going in, we're doing significant improvements, and we're shifting the complete current, tenant clientele. So there's a lot of moving parts.
Right. You upgrade the property, upgrade the tenants, and then upgrade the rent.
Exactly.
That's good, man. That's good. Good stuff. So I know I've heard you talk a little bit about being able to do this with no money or no credit. How does that work?
That was so my very first deal, which was in Indianapolis. The total purchase price was $25,000, and that was and put $25,000 into it. Again, we're in the Midwest, very affordable houses. This was a C-class asset in about a C plus B minus neighborhood, and rented that for $850. So that was through my mentor, who actually started working for free. Right. And again, on his side, he was looking to diversify from multifamily to single families. Didn't have the time to find the deal. I had a whole lot of time. I had time to find the deal. I said, hey, this is a phenomenal investment. Brought that to him, and that's how the first deal was funded.
That's awesome. That's really good. Good. So what other tips and strategies do you have to share with our listeners about multifamily? I mean, you're like right now you're in the middle of branding yourself, and you've got like a sphere of influence in the real estate industry. How has that helped you?
It is, I think for myself personally, it's really been great to give back to others who are up and comers. So I really get satisfaction from that. Right. And then also attracting the investors to be partners is another benefit as well. And then one thing that has really helped me, and I'm going to give kudos to Grant Cardone, which I don't know if you're familiar with him.
Oh,
but
sure.
Huge sales guy. And what I took away from him relating to the real estate field is even when you're buying, you're still selling.
Right. I love it.
Yes.
Even when you're buying, you're still selling.
Exactly. And to give you an example is you have to sell that owner sell that owner why it's good to sell and why it's beneficial to sell to you. So it's all a selling process. And even if they're not interested in, also on top of that is the follow-up. And through that is if the person's not interested then and there, like that 80 unit I was mentioning we purchased in Louisville, that guy wasn't interested or didn't even want to take my call the first 4 or 5 months. Month 6, he was ready to go. And wow. That's just about following up. And it's about being creative. So you can keep pounding the phone saying, hey, are you interested in selling? Hey, are you interested in selling? But you have to get creative. Personal visits. I showed up. We had cups of coffee. I send him direct mail pieces to say, hey, just thought about you, wanted to send this over. This is a way you could save on taxes, 1031 exchange. So it's getting creative in the way to follow up. So you'll stay top of mind. So when they are ready to sell.
Now, have you already closed on that deal?
Yes, that's true.
Okay. So you could share a little details about, would you tell us a little bit about the details of that deal?
Yeah, so that is a 80-unit apartment complex that is in Louisville, Kentucky. It's a C-class asset, so a little bit older built, had some deferred maintenance. And what we're doing is it was $100 to $150 under rented for us putting in, I believe it's about $6,000 to $7,000 per door into the asset in order to get those rent bumps.
Right.
And we're looking at within between year one and year two, push up our cash on cash to about 11 to 12% to our partners. So that's how it looks on the financials.
Sweet. What did you pay for that?
Oh, gosh, what was that? I believe it was $2.25 million.
Okay. Do you remember about how much money you had to raise on that one?
A little over $1 million.
Okay. And that's not because of the down payment, but because you had to have some CapEx,
Exactly,
expenditures to be able to fund the repairs, right?
Exactly. It needed some work. Not so much on the exterior, but the interior was pretty outdated.
Yeah. Okay. Good. That's awesome, man. That's awesome. Tell us a little bit. Go ahead.
And I wanted to mention, this was a learning lesson for myself, is when you're raising capital, is always take that into consideration, how much money that you need to take care of the improvements.
Right.
Because on one of our deals, we tried to take that out of the cash flow, which is a huge no-no, raise that up front. If it doesn't make sense on the numbers, then you just have to move on to the next deal. That's what it comes down to. Right. Luckily, we saved ourselves on the other deal, but that was a huge learning lesson.
The good news is you're persistent, man, and persistence pays off, right?
Exactly.
Get her done.
Make it happen.
That's awesome, man. So talk a little bit about creative financing structuring.
So our first deal, to give everyone an example, is the seller was motivated. Total purchase price was $900,000.
Right.
And he carried back, he owned it free and clear, $700,000. So we only had to put down $200,000 of our own cash. So this was seller financing. And then we raised $685,000 to take care of improvements. So that was a little bit in terms of on the creative side and getting that deal done.
So you raised $685,000 plus the $200,000, right?
Mm-hmm, correct.
So $885,000, just under $1 million. And tell us about that project now. What's going on with it?
Yeah, so this was 46 units, so a little bit smaller. And gosh, what were the details? I would say the average, those were about $100 to $75 under rented. Now I'm trying to think how much per door that averaged out to. But
what's the value of that project now?
1.617. We're actually in the refi at this moment to pull our cash out of that our cash and also our investor cash.
So the model on this one, instead of sell it right away, is your investors are in, they're getting their 8 pref plus the when you refinance it, you'll pay them off, right?
Exactly.
Mm-hmm. And then will they still be in the deal?
So we did this one as debt as our first one. So they're just getting a 8% and nothing additional on top of that. And then once we cash them out, they're going to be completely out. Versus on our other deals, we've structured it since it's more on the equity. And again, there's so many different structures and so many ways to go about these deals. Is on our later ones on the equity side, when we do a refinance, we still keep the investors still retain ownership.
Now, you're in the middle of a refi now, right?
Mm-hmm. Exactly.
Right. Good. I hope you're going to ask for a discount to pay off that loan.
Yes. Yes.
You will now anyway, right?
Exactly.
Yeah, you never know because the guy's got to pay taxes, right? Mm-hmm. He's got to pay taxes. So he might even just give you a discount, right?
Yeah, I would hope so. I know
You never know.
over the one thing I wanted to mention is the interest rate. So we on that 700,000 that seller had
Right.
is they actually incentivize us to get a refinance as quickly as possible.
Oh, okay.
So the first year I think it was 3% interest. Second year goes up to 5, and then third year goes up to 7. So I think right now we're in that 7 period, but definitely could possibly negotiate that down on that price.
That's good. That
Yeah.
is good. Awesome, awesome. So you've got a site, syndicationpro.co, right?
Correct.
.com.co. Tell us a little bit about that.
Yeah, so Syndication Pro came from what Holdfolio uses to syndicate our deals. So it allows us to save significant time raising money and also managing investors. So before, there's a lot of manual labor going back and forth with your partners on
Right.
did you wire your funds or where they're at in the process. So we built Syndication Pro from scratch what we use, and then we decided to provide it to others such as us as well.
Okay, awesome. And what are the benefits of somebody using Syndication Pro?
It allows you to have that foundation set. So once you're, to have the foundation and the structure from once you have your offering available to sending that out to your investor partners, them clicking the link, visiting that invest page and seeing everything associated with it, and then clicking the invest now button, signing the the PPM, and then actually funding their investment. And then the second half is being able to go to your website and track that specific deal, how they're doing on their returns.
So as a syndicator promoter, you can upload or post all the data about your property, the financials or whatever, and then the investors can go in and check those numbers on a monthly or quarterly basis, right?
Exactly.
That's really cool, man. Plus, I notice here it says that, you can manage the partnerships into future investment deals and manage investor relationship with built-in CRM. That's awesome, man. I love it. And it also helps keep you in compliant with the SEC, which is number one.
Exactly. You still have to get a attorney involved and determine how you can what you're supposed to do and what not supposed to do, but the capabilities in there are for you once you have that understanding.
That's really good. That's really good, man. That's awesome. So if somebody wanted to reach out to you, how would they get in touch with you?
Yeah, so you can reach out to me at sterling@syndicationpro.co, not .com. And then also, if you're on biggerpockets.com, you can slide into my DM on there, and I'm more than happy to provide any value for you. And that's direct message for all you guys.
There you go. That's good, man. Well, listen, I really, really appreciate you being on. This has been awesome, man. This is good stuff.
Oh yeah, I'm ultimately here to bring you guys value. And again, if I didn't happen to answer anything or stay too much in the clouds, do not hesitate to reach out to me. I'm here for you.
That's really cool, man. Thank you so much for being on. I really, really appreciate it. And if there's anything I can ever help you with, please let me know.
Oh yeah, we'll do, Larry.
All right, buddy. Thanks a lot. And guys, everybody watching and listening, thank you guys so much for being on. I know you got a lot out of this. Please be sure and give us some feedback. Like this, share it, give us some feedback. We really, really appreciate it. We always learn from it and we check it all out and read it. So thank you very much for watching, for listening, and we'll see you on the next Grain Picker Pro. Thanks a lot. Bye, Sterling.
Do big things, all. Woo!